and checking because there are some restructuring charges. A couple other things here about the outlook. They say they expect the 2023 total revenue to be in a range of $29.5 to $32 billion, so that it is a relatively large range there. But they do narrow the expense range, now saying they expect the full year total expenses to be in the range of 86 to 90 billion. Previously, the top end of the range was 92 billion, bringing that down. Also saying that includes $3 to $5 billion of restructuring costs. Notably, since there is so much attention to this Reality Labs division, which is the metaverse division, they say we continue to expect Reality Labs operating losses to increase year over year in 2023. Now, in terms of daily active users, that number did come in better than anticipated. The company reporting 2.04 billion daily active users. Analysts had been looking for just 2.01 billion, so better than expected user growth there. We're going to continue to dive into this and look at some of these severance charges and the like, but the stock is now up over 9%. Back over to you guys.
Yeah, big move after hours for Meta. Adam, Chris Afuli, want to bring you back into the conversation here, get your reaction to Meta and how it speaks to this broader conversation we kicked off the hour with, which is the focus on margins, the focus on cost cuts, that narrowing expense range to $86 to $90 billion, certainly getting some attention.
No, absolutely. For these big tech companies, they took on so much incremental expense during the pandemic. There's so much fat that can be cut out of that, and the margin potential is going to be really impressive going forward. And I think that's for corporate America in general, but especially for these tech giants. And this is probably the third or fourth time Meta has cut that operating expense guidance for 2023. And then on top of that, you're also now outperforming a little bit on revenue. And that's actually something Google said last night about how they're seeing a stabilization in YouTube advertising, which is a lot of the same advertising dollars that Meta is attracting as well. So if you start to see revenue work alongside the expense progress, that's a really powerful tailwind for these tech mega caps. And we've seen it now, out of two of them, at least Microsoft and Meta, and then Google to a lesser extent as well. But that's kind of really the big theme of earnings season so far.
Yeah, maybe some more themes developing as well. ServiceNow moving around still higher, but we're talking, Mike, about potential read-throughs from Microsoft. Enterprise software still apparently essential. The cloud, even though some customers are asking for discounts, the margins seem to be holding up here as well. And then on Meta, as we talked about, it seems like they did a good job sandbagging at some point.
Yeah, Meta, certainly either that or they overachieved what they were anticipating.
That's generous.
It just shows you how much room they probably had.
When you spend a whole bunch of money, you have a whole lot of room to spend a little bit less money.
Exactly.
Quarter.
And we're sitting here, we're clapping for, $90 billion in expenses at the high end for the coming year. And by the way, the employee count down only 1% year over year as of March 31st. So the kind of latest round of layoffs is not reflected in there, but the initial one was. It shows you, I think, just how much they have the ability to do a little bit more with less. And we talked about, top line growth would be the coin of the realm with this in terms of the stock reaction. And that's absolutely what they delivered.
Well, let's get to eBay. Speaking of delivery, the earnings are out. Courtney Reagan, what do they look like?
Hi there, John. Yes, we are going through earnings for both Mattel and eBay. We are going to start with you and let's start with Mattel here first. So Mattel actually reporting a loss of 24 cents adjusted here for the quarter. That is a worse loss than expected, but on stronger than expected revenues of 118 million. The street was just looking for 740 million for the revenues. They are reiterating their guidance. They had given us a bit of a pre-announcement, and they are reiterating that. The CFO also notes he expects consumer demand to be positive for the full year and for revenue comparisons to improve. So again, reporting to some improvement in the second half of the year, but still calling out some difficult positions in retail inventory. It does look like shares of Mattel are down marginally on that. And then if we can turn to eBay, eBay's first quarter results reporting earnings per share of $1.11 adjusted. That was 4 cents better than the street's consensus. Revenues just about in line to slightly better at $2.51 billion. The street was looking for $2.48 billion. They are also giving an earnings guidance that brackets the street at 96 cents to $1.01, and the street was looking for 99 cents adjusted for eBay's second quarter. And also the or the revenue guidance of 2.47 billion to 2.54 billion is slightly better than the street had expected here. It does look like shares are up for eBay by about 5%. They also are saying that their buyers slightly higher than the street had been anticipating at 133 million. Back over to you guys.
Okay, Courtney Reagan, thank you.
Thank you.
Mike, I mean, we've been talking about inflation and pricing pressure.
eBay came out eBay came out in surprise. Look at that. eBay came out. Let's take a look here. eBay came out and popped. Look at that. Meta, I'm talking about. eBay actually did really well. Now, I'm going to keep an eye. Let's keep an eye on Meta after hours. Meta was up almost, let's just say 9% at this point. And Meta's doing extremely well. And so they did, here is the caveat. They did say that they're going to listen to what they're saying. They're going to continue to lose money in the metaverse because of the commitment that they have. They're going to continue to lose money, right? But they did a good job on, of course, they announced the layoffs. Mark Zuckerberg came before Congress. He said, I hear you. They abandoned the metaverse, and now they have to get back into the AI chase, and they're operating leaner, and it has paid off. Let's look at it. Let's look at the month. Let's look at 6 months. Look at how much we're up. 113% year to date up. Look at that. So, man, hats off to Mark, because I had written him off like you crazy. It was just like Elon over there fooling with Twitter, which caused the stock to tank. That's when it went down to 100. He just lost focus. So Mark is doing his thing. I was just saying, I thought it might have been a miss, but I didn't play it. I didn't play Meta because I was unsure of Meta. I was unsure of Meta, and this is what I was saying. I was unsure of Meta, and I'm unsure of Amazon. I really am. So I don't play the ones that I'm unsure of, right? And so I'm going to just tell you guys the same thing. If you're really unsure, then don't put your hard-earned money to work on stuff you're really not sure of, because it's just a gamble at that point, like First Republic Bank, you kind of saw the pattern I showed you in an earlier video. It ran up, right? Then it popped and it dropped, and that's exactly what it did. So those are the plays that I get into. When you just don't know until the numbers come out, I could tell you Meta is a surprise. It's a big surprise that they're doing this good. It's actually going up almost 9% now. It was up almost 10%. So Meta is doing its thing, and you guys can see that comeback. But let's go out a year. I hear that song, Don't Call It a Comeback. Man, let's look at this, good people. Remember what happened? Meta was up here at 200-ish. And then it came all the way down to $88, and then it ramped back up, man. You just, it goes to show you can't write anybody off. Like, a lot of us thought Mark had lost his mind just chasing them, putting that much money into the metaverse. But he heard the VOC, voice of the people, and he came back. And you know what I do like about Meta? This is what I like about Meta. This PE has come down. Look at it, 22.90. I did not know it had come down that low. But Meta is looking more reasonable now. But it lost half. But just look at this, good people. I just thought about something I want to point out to you guys. Let's put in Tesla. Look at this. And let's see. Let's add Tesla. Watch this. Let's add TSLA. Okay, so let's look at this, good people, right? So here is both of these companies, Meta and Tesla. Around this time, Elon said, hey, I'm going to mess around and just, I'm going to mess around with this other company and it's going to be my main focus. That's what Elon did, right? With Twitter. And then Mark Zuckerberg changed the name of the company and said, hey, this is what I'm going to do. And then look at what happened to both of them. And then they both had a come to Jesus meeting and they both woke up right here. And then look at what happened when they came back to their core investors. Boom, they both come back up. So they both lost about 50% of, look at that. They both lost about 50% of market share. Look at that. The blue one is Tesla. Tesla lost it here, and then Meta lost it here. And then look at what happened when they came back home or when they woke up. All right. So that's what I want to say. Let's see here. From Uncle Larry, seeing what Microsoft and Meta did, will you play Amazon? No, not just based on this. Amazon is different, right? Amazon's a different company. Like I go in now anything I say is not a suggestion for you to buy or hold or sell. I go in heavier on the for sure, right? And I'm not 100% sure about Amazon. I'm just not. I think Amazon will be okay, right? Just think about it. Visa, right? Look at how Visa is performing. The question is, do you think most of Americans stop ordering stuff online? No. Have Americans run out of money? No. Even with the credit tightening? No. We're using our credit cards. What do we use our credit cards for? To buy stuff. So if I had to make a bet, I would not do, this is me. I just wouldn't bet against Amazon at this point. I just wouldn't. That's what I would say. Now, anything could happen. They could internally have done some bad things causing the stock to fall. Follow? But as far as what the consumer is doing, that part, I don't think they're going to see a slowdown in income, right? Now, how they operate their margins and their expenses and their debt, that's internal. So you got to study all of that stuff, okay? What else? Yes, Meta is up. Yep, Meta is up. Let's go back to the day. Let's see what Meta's doing. Yeah, Meta's back up 9%. Now, let's watch this and see. And by the way, thank you for your super chat. Uncle, I'm not even going to try to pronounce that last name. Yep. Hey, what's up, family? So, yeah, that's it. So no earnings recession? Not yet. Not with these numbers. Everybody's doing well. But remember, we have more companies to report. And that does not mean that we're not going to go into an earnings recession. I'm just telling you, this has been the trickiest market ever. No one is going to guess everything right. Not one person is going to guess everything right. So you got to trade the market that you're in. And so we just got to watch this and keep an eye on it. I think, of course, long term, I still see that there is a recession coming. But having said that, me personally, I don't believe it's going to be as bad, as long, as deep as 2008. I believe that the Fed, when it does happen, I do believe that the Fed will reverse its interest rates hikes and actually start decreasing interest rates. That's what I believe. I know I stand alone on that. I think that may come this year at the latest. I think Q1 of next year, and it will be buying season, right? So we ain't scared. We prepared. All right. Let's get one more in. Watch your language, fam. Watch your language. Play on Meta tomorrow. You kind of needed to be in that play today, right? Meta is still, look at that. It's up 10%. Who played Meta? Who played Meta? Leave me a comment if you got in on Meta, right? There you go. There you go. Kathy, I just got through talking to to, I actually just had a cup of coffee that I'm interested in. It will be a medium roast, I promise you. Medium and light, it will be, all right? All right, good people. That's what I wanted to do. I just wanted to spend 15 minutes, come to you guys live with this Meta report. Let's see if they're talking about anything else. Let's listen for a minute.
Taking a leg higher, up more than 5-6%. Quite a bit of movement. ServiceNow also remains up more than 2.5% as we await those calls. Let's look further into strategy. What should you do with your portfolio from here? Joining us now is Joseph Amato from Neuberger Berman. Joe, great to have you back. So
Thanks, John.
I know you favor value over growth here, but do these results from some of these tech names make you question that at all?
Well, I think it's certainly been an interesting earnings season over the course of the last number of weeks, right? We've seen companies, whether they're in the producing goods or services, see some of the fundamental dynamics drive their business. So, we see weakness on the goods side, we see strength on the services side. So to me,
hey, you guys think that that's weird? Look at what else is weird. All crypto is dropping. All crypto is dropping, right? You would think that it would be stabilizing, but it's actually dropping. So let's just keep an eye. There's a lot of mysterious stuff going on. And like I said, I only go in when I'm for sure. Don't be in a rush to get into plays that you're not sure of, because it's just a gamble. Some will win, some will lose. And don't worry about not getting in a play and making money, right? Because the very opposite could have came and you'd have said, oh, I should have never put my money in the Meta, right? And so if you don't know, you don't know. If these big time analysts with all of this data don't know, and I say I'm neutral on it and I'm not in it, then and you haven't done any study on your own, then don't risk your money. It's better to not get into a play that was a win and protect your money rather than get into a play and lose your money, okay? And so someone said temperament in a bear market is what's going to save you a lot of pain and a lot of gain, all right? I'm gonna leave it right there, good people. We will see you tomorrow morning. I'm going live tomorrow morning. We'll see you then. Make sure you check out all of the links below, especially Stock Up You. If you want to make long-term money, if you don't want to just be fed fish, but learn how to fish, then the Stock Up You is the top link below. We'll see you guys tomorrow morning. Live, love, laugh, learn. Love you, fam.